Welcome back to the Golden Sweet YouTube channel. So one of the great things about being your own boss, Forex trade or any business is that you work from anywhere that you like. So today the sun's shining, we don't want to spend all day in the office, so it's good to be able to come down, go anywhere you want, bring your laptop, get some trading done, etc. So we're going to break down some charts now, but most importantly, I'm going to take you through a technical analysis blueprint because it's so important that if you're a trader now or you want to be a Forex trader, you have to have a step-by-step rigid plan, your go-to plan. And I'm going to take you through how you should kind of build that plan by showing you the technical analysis blueprint towards the end of this video.
What do you go for, Ryan?
Cod and chips, mate. Seaside, didn't we? Keep it traditional. So I want you to think about any job that you do or go to or whatever. There's always a kind of systematic approach. There's a plan to get that job done, right? All the time, no matter what that job is. Forex is no different. You can't just undo a chart and just go, that looks like a buy, that looks like a sell. There needs to be an approach. And I'm going to do a little quick mini breakdown now of a trade that I actually sent into the Golden Sweet and why we took this trade, why it made profit, so on and so forth. And then when we go through the blueprint, we'll be outlining all the more finer details. So we can see here, multi-time frame analysis is key for me. That's part of my approach, part of my plan. So we've got this very simple level coming through here at the moment. As you can see, we've actually tested that level first of all. So we tested that level on the weekly time frame. Perfect. So I was happy with that. I was like, yeah, we tested that level. There's a good chance we could see a further push down. And then I'm looking for clues on the lower time frame. So at this point, if I go back in time, we was up around about this sort of level. And what I really liked about this, when I went down to the daily time frame, straight away, we're kind of seeing something which I like to call the power of three. And that's where you get this head and shoulders formation across multiple time frames all the time. 15 minute, 30 minute, 1 hour, 4 hour, and obviously the higher the time frame, the stronger it is. So I just keep things super simple as much as possible. And we can see it, we came up once, we made a new high, we then broke back below this level here. Great. What did we do when we broke back below? We trickled back. Keyword, trickled back. We had a break below, we trickled back, and then obviously we rejected. So we could have took a short from there if we wanted to. It's just personal preference depending on your entry, but I like to try and get as tight a stop loss as possible, and then obviously see price drop as much as possible to maximise my risk to reward ratio. So when I went down to the 4 hour time frame, this actually really started to stack up for me because we had what we call a ascending channel like this. Again, just nice and simple. And what I was waiting for here was price to make a move at this level. And this level was important because if I just pull this back, we'd already broken back below the last low. We'd came back and retested that last high, come back below the last high, made a new low, we came back to retest. So I'm looking for a further push down. You can see here we've got this very, very key level of support. If I go down to the 1 hour, you're going to see how important this is because the devil is in the details. Look at all the clues here, look at all these wicks, wick. And what I wanted to see, because our higher time frame conferences were saying short, was a breakdown, a retest, and then look for the short trade. Now, retests won't always be pinpoint perfect. They may come back up a little bit higher. So what we do is mark off secondary levels, like this, for example, because price can just break down, come back, then drop. Okay, it's never going to be pinpoint perfect. If you're looking for perfection in the markets, you're going to struggle a little bit. So let's see how this one went on. So we've got a very, very aggressive breakout. This is what I love, big, strong breakout. We want to see more of a trickle back now. Usually get like a form of a flag or a wedge, so on and so forth. So you can see here, price just kind of trickling back, and there we go. We came up, we got the high test there. We actually took the short trade. We had a very small stop. I can't remember what the stop was now. I think it was actually just above this level here. So about 20 odd pip stop, just above this level of resistance, just in case we come back up for a final test of that level. I wanted to get my stops behind some barriers. And then we went into about 7 pips drawdown, something silly like that. Then all of a sudden, that was it, we're breaking out. And our target was actually the lows of this channel. So that was our target down here. And don't always target the low, like pinpoint. Target it just above, because you want your take profit to get smashed. You want it to hit easily. You don't want to be below the low and Choice is trying to break through the low. You want your take profit in front of barriers, stop loss behind barriers. So we play this on the 4-hour time frame, so it goes a bit quicker. You can see all our confidence is all stacking up very nicely. And then all of a sudden, we just continue to push. And it was a really great trade actually. Profit was made, step-by-step approach, like you need a step-by-step approach. And our TV was actually pretty good location. We just came through the low and now we're starting to push back up. This is present day. So nice risk to reward ratio there, 1 to 3, good profit, step-by-step approach. So we're finishing now, we're finished lunch, so just finish up my drink in the sun, head back to Golden Street HQ, and I'm going to take you through step-by-step of the technical analysis blueprint. Okay, so come take a look. I just got a new wrap on the car. The old one was getting a bit tired. Let me know what you think in the comments below. I went for satin silver. Yes, maybe I did play it a little bit too safe, but I don't know, I kind of like it. It looks good in the sun. It looks classy. I didn't want to go for anything too loud. But yeah, let me know what you think in the comments, and I'll see you back at HQ. Okay, so let's get started with the technical analysis blueprint. Coming over to the board, and we're going to dive into it right now. When it comes to technical analysis, there's lots of different methods and techniques that we can use, which I'm going to go through now. But we can use those in a specific order called multi-time frame analysis, and that's where we can detect our higher time frame bias, look at what phase the market is on, then of course we can go down the time frame step by step, and that's where we can find our entry. So already there, I've just told you a systemized approach. Start on the higher time frames, find your bias, work down the time frames to find your entry, and that's where we fine tune. However, a lot of people think they've mastered the simple stuff like trend lines. So we use trend lines to identify the market is moving up or down. That's all it is, very simple. We haven't got to overcomplicate this. But what a lot of people do, because trend lines are very easy to draw, they're very easy to find, they master trend lines, say like 60%. I think they've got it yet, brilliant. They move on to the next part of their technical analysis, where in reality, trend lines are very easy to master, but you need to go a level deeper. You do need to be looking a little bit more at, has this been a trend change? Because the common mistake that traders are making, let's say we're in an uptrend, for example, and of course we can just mark our high lows, and there we have an uptrend, 3 touches. Price breaks this uptrend here, and now everyone's looking for a short, but the trend hasn't actually changed. So a lot of traders, they're using this trend line as a precise line, not just a guide, because that's all it is. Now, if I mark this line through here, my last high, mark that a bit straighter, my last high, but it's coming down to my last high, which of course is support. So what's a good chance it's going to happen here? Prices is going to continue up, and then what you're going to do, you're just going to end up remarking your trend line out there instead. So be very careful that you're not using that trend line as an exact science. You do need to be looking at the higher highs and the higher lows as prices moving up, because this trend line, it's never going to be bang on perfect. Price will push through sometimes. It's catching the breakout traders out, and then it will just continue up and break back into the trend line, and then you're going to adjust your trend line accordingly. So just be very careful about that. A true trend is of course justified by looking at the high highs and the higher lows and the lower lows and the lower highs. We're going to this a lot more inside the Golden Suite. I've actually got a really good section where I show you a very unique way that I like to trade trend lines using multi-time frame trend lines. So next up, you can first of all identify any trends on the higher time frames and the lower time frames. What direction have we got? Next up, support and resistance. Again, basic stuff. We're looking to draw diagonal lines for trend lines and horizontal lines for support and resistance. But if you can get these in the correct place, that's when you can start to find your double zones. And the thousands of people that I've taught, I found a lot of success by finding these double zones, knowing where to locate the double zones and how to trade around these levels. It's very important. And already, we're moving through systematically, aren't we? We're looking for trend lines, we're looking for horizontal zones, looking for those double zones. And again, a lot of people think they've got this mastered, but really they've only mastered it
50%. The master trend line is only 60%. So already, they're only 50, 60% as good as what they could be because they didn't spend the time on the basic stuff. Because everybody goes, yeah, trend line, support, resistance, oh, that's easy. But have they really mastered the basics? It should never be overlooked. It's that mindset like, yeah, this is easier to support and resistance than a trend lines because it is, but that's why people overlook it because they want to get to the good stuff. They want to get to the trading. So just make sure you've completely 100% mastered the absolute basics before you move on to the good stuff. Next up is structure and patterns. I absolutely love structure. I use the higher time frame structure as my guide of where I'm trading from and where I'm trading to. I also use it on the lower time frames to help find my entry. So for example, there's a multitude of structure, but imagine if you've now successfully plotted an uptrend. You've now just come down, you made a new low. Price is pulling back, brilliant. You've got a level of old support here, which is now resistance. And what have you got up here? A nice double top, brilliant. So where are you gonna look to trade from? This level, of course you are. You just need an entry technique. You now know where to trade from because you've got a double zone. However, you need to know how to get into that trade to make sure that this level is of course a valid zone. Because if you don't know the right signals when to get in, price can just break above and we just continue up. It's a false move. But if you know what to look for here, you can catch the trade, get your stop loss in, get your TP in, and down we go. So structure is something that we're using as an extra confluence to find successful trades and detect our bias. And we've got many different ways that we trade structure, predominantly the MSB and the MSBC strategies inside the Golden Suite, which have found a lot of success of our students securing over $5 million in funded Forex trading accounts, which is absolutely huge and something that I'm very proud of. So step by step already, we're going to locate trend lines, support resistance, we're going to spot any structure. This could be double tops, double bottoms, head and shoulders, which I absolutely love, inverted head and shoulders. This could be flags, this could be wedges, this could be bigger channels like this. So much structure. And do you know what I'm actually going to do? In the description below, I'm going to stick in a completely free ebook, no email required. Just click on it, you can download it straight away, of all my favorite structure that I like to trade, with a little explanation underneath as well. So you can download that ebook for free in the description. So we've worked from the higher time frames, plotting our support, resistance, looking for any structure. We're now moving down to lower time frames, and we're going to do exactly the same. We're going to be fine tuning, looking for the smaller structures and the more minor levels of support and resistance, and of course, locating the trends so we can see if we're on a push or exhaustion phase, and so on. Next up, when we're looking for entry, we start to get these candlestick patterns. Now, there's lots of different candlestick patterns that I like to use, and again, I'm going to stick a free ebook in the description for you, no email or subscription required. You just download it, it's yours for free. Candlestick patterns are going to help us, one, find entry. That's on the lower time frames, and two, on the higher time frames, it can actually give us direction. Actually give us a really good direction, because if we've got a big weekly high test or a daily high test or daily twos to top, something like that, coming off a key level, we know there's a good chance now that price could reverse. Not instantly, because usually after a big weekly high test, we will get some sort of exhaustion before we drop. So please don't make that mistake and just enter straight after a weekly high test. There's a good chance price will retrace at least 50%. But we can use high time frame candlestick clues for direction, lower time frame candlesticks to fine tune our entry. And it's very, very important that you study these really nicely so you can know these candlestick patterns at the back of your hand, because there's morning stars, evening stars, tweezer tops, tweezer bottoms, engulfing candles, dojis, etc, etc. You'll find all of that with a little bit of an explanation as well in the ebook in the description. Next up, Fibonacci. So I love trading push and exhaustion. You may have seen this on my free training that I give away. Again, I will put the link in the description. So there's a free training on push and exhaustion and how it benefits me as a trader. And I like to use the Fibonacci tool just to help me detect and use as another confluence of when exhaustion is complete, along with using these methods as confluences as well. So make sure if you are using Fibonacci, you know the correct levels, you know what you're looking for, and also back test as many pairs as you can in detail. So don't try and back test through like 4 or 5 years really quickly. It doesn't matter if you do 6 months, as long as it's quality back testing. And you can just dedicate a little bit of time every day to a bit of back testing, and you'll soon see what pairs prefer what retracement. So some pairs just like the 0.382 fib, some pairs prefer 50% fib, some pairs prefer 618 fib. So once you get to know these pairs as well, you can really build up your own confidence in trading these pairs because you've got the knowledge. You got the knowledge. Then by putting all this together, what do we have? Multi-time frame analysis. So we can start on the higher time frames, higher TF. We're going to work down to the lower time frames. And it could usually start with, for me, I'm a day trader, so I always definitely take a look at the weekly. Then I move down to the daily, 4 hour and 1 hour. And when I'm fine tuning, I can look to get entry on the 15-minute time frame. And that's where I can get those really tight stop losses and that bigger take profit. So I hope you've benefited from this video. Please let me know in the comments below, and in the description you're going to find 2 ebooks and some more free training. No email required, you can just jump straight in, and please let me know what you think, because we want to make more of these videos. I want to hear your thoughts so we can continue to make them better. Please like and subscribe, and I'll see you again soon.